It's Finance Friday, and this week we are focusing on the younger generations. And while saving money and planning for the future can seem daunting for some people, especially nowadays, there are more options available now than there were years ago. First Ontario's Chief Risk Officer Mark Perkins joins us with more. Good morning. Thanks for joining us.
Yeah, good morning. And this question's come up because I've actually been asked it just kind of along the street and with friends and family over the last couple of months. So I thought it was a great opportunity to kind of talk about it, and whether it's the young adults or the parents of young adults who are trying to, give the right financial advice. So, our generation and the one before, the tools were limited. All you had was RRSP. So the advice was max out your RRSP as soon as you start working, and, you should be okay in retirement. And that's still great sound advice, but much like the rest of life, the options to the younger generations have kind of expanded, and you kind of have to update your advice along the way. So, we look at the programs that are available from the government. So the RRSP, which is tax deferral, you get your tax back and you pay tax again when you withdraw that at a later date based on your marginal income. The tax-free savings account is made with after-tax income, and you can take that at any point without any tax implications. And then if you do take some out, you can recontribute it later. So that's more of an ongoing savings vehicle for emergencies or for trips or cars or whatever you want to say. And then in 2023, if we remember, the government launched the First Home Savings Account. So that's definitely targeted at first-time home buyers, and it has the benefits of the RRSP in terms of the tax treatment, but also the TFSA on all the earnings and income. As long as you put that money towards the purchase of a house, there's no tax implications. One of the other questions that kind of comes up is the RRSP does have a first-time home buyer feature to it where you can make a withdrawal from your RRSP tax-free to buy a home. However, that money has to be repaid within 15 years, and it's got a maximum of $60,000 withdrawal. So the First Home Savings Account, you don't have to repay that at any time. You get the tax benefits of that.
So there's, you mentioned TFSA, RRSP, the home savings, like there's so many options out there. How do you decide?
Well, I always say talk to a professional advisor and make sure you get you get the right plan specifically for you. But the way I look at it is trying to maximize the benefits. So one of the general rules is you're going to earn more later on in life than you are earlier in life. So when you think of your RRSP contribution room and the tax benefit on your marginal tax rate, if you contribute later in life, you're going to get more bang for your buck. The big thing is, I'm going to say nobody, but almost nobody has enough money when they're first starting their career to do all these things. The FHSA has an $8,000 a year limit, the TFSA is $7,000, and the RRSP is 18% of your income. So you really got to prioritize. If you want to be a homeowner at some point in your life, or you think you might, the other two programs, the TFSA and RRSP, generate contribution room automatically. But the FHSA doesn't until you open it. So once you're age of majority, 18 or older, minimum contribution's $100. Like, get that open and start, developing your contribution room on that one. And if you don't decide to buy a home, you can move all that into an RRSP and get the tax treatment of that later in life. And again, if you think you want a car, or there's emergency rainy day fund. I love that use for the TFSA, is just putting money aside for those unforeseen emergencies, which we all experience at some point in our lives. And then, as your income goes up, or as your savings go up, you can start to prioritize the RRSP once you've kind of developed enough in those other things to make those purchases or have that safety net in place.
You're climbing the career ladder, you're earning more money, you can dedicate funds to that. Great information. And if you have Finance Friday questions for Mark or Colin to discuss in one of our future segments, by emailing financefriday@firstontario.com. If your question or topic is selected to be covered on air, you'll receive a gift card from First Ontario Credit Union.